And I like your name, Resistance Chicks.
Hey guys, welcome back to Resistance Chicks. We are your hosts, Leah and Michelle. Today we have a very, very special interview with LYNETTE ZANG, which we are a little bit giddy and kind of starstruck about. She is from ITM Trading, and we have a boatload of questions for her that we are going to try not to pepper her with. But if you guys are not familiar with LYNETTE and all the work that they are doing over at ITM Trading, I want you guys to visit their website, which I have in the description, and we will talk about throughout. But LYNETTE, I'm wondering if you could go ahead and give us a little bit of a background for our viewers who may not know who you are or may not know what ITM Trading is about. Just, kind of briefly. So thank you for being here. We are honored to have you.
It's my pleasure, and you have to be giddy because I'm just like everybody else, honestly. It took me all this time, 63 years to get here. But that kind of goes to your question because, frankly, I was groomed for this moment in time by the universe or whatever power that you believe in.
I like that.
And, so I've been in these markets on some level since 1964 when I was 10 years old. Because my uncle was a major dealer back east, and he dealt in very high-end tangibles. And in 65, it was illegal to own gold in this country. And he actually had accumulated a lot of gold in pre-33 form, which was actually legal to accumulate. It's just that the general public didn't understand the laws. So I've been a banker. I became a stockbroker in 86. In that capacity, I stumbled across what was called non-dollar denominated bonds. All that gobbledygook means is that these were bonds that were issued in different currencies, and that took me into the currency markets. So I've been studying currencies since 1987. And I'm also definitely an artist. So I see patterns. And when I see repeatable patterns that have occurred over 5,000 years, every time the same, and we're doing the same thing.
Right.
I can't really guarantee tomorrow, but history absolutely repeats itself.
Absolutely.
Right. So, so my work is really my mission on this planet is to translate financial noise into understandable language. Because how many times can you be lied to when you do not know the truth?
Absolutely. And that's your interview with Danielle yesterday. You guys check that out. She interviewed a woman who was on the inside of the Fed and came out. Danielle DiMartino, is that correct, Booth?
Yep, Danielle DiMartino Booth, and her book, which is called Fed Up, Why the Federal Reserve is Bad for America. Boy, could I'm actually in the process of a book myself on how they make monetary transitions. It should be done. We're about halfway through. It should be done maybe by the end of this year.
We will be promoting that.
That is fantastic.
I'm very excited about this.
So if you could get our viewers, you can't give them a whole primer, a little primer on, let's just say maybe America's financial system in the past 100 years, and how we ended up to be trillions of dollars in debt, and where you see it going in the next, foreseeable future.
Well, that's actually, that's a great question. So I want to back up to move forward and go earlier than 1913, because what people do not understand anymore is what is money. We've just been really, they have made us just think of it simply as a tool of barter. But we needed a tool that would enable us to specialize. So in a town, you can have a banker, you can have a lawyer, you can have a baker, But we needed a tool that would enable us to specialize, but also hold any excess labor that we generate today that we don't need to use for use in the future. And the goal was for it to have the same level of purchasing power. So over 6,000 years, they've tried lots of things.
Sure.
But only gold evolved
Right.
as the primary currency metal because it meets all of the criteria.
Right.
Plus, it's labor-based.
Right.
It takes labor and energy to pull it out of the ground.
Right.
And so it was a very fair way to value your labor for someone else's labor.
Yeah.
But the problem with it for governments was if they wanted to tax you, it was visible.
Sure.
And you might not agree.
Right.
So it is much easier to hold pieces of paper in your pocket than heavy gold and silver. Yep. So first they did gold and silver certificates,
right,
which were interchangeable. You could go to any bank and convert that bill into gold or into silver.
Right.
But in 1913, and before that, a 20th of an ounce of gold, So our government went actually against the Constitution, where we were warned not to put central bankers in place.
Right.
But we did, and in 1913, they legalized the Federal Reserve.
Right.
And at that point, because they wanted to stimulate the economy, now a 20th of an ounce of gold backed $2.40.
Wow.
Right?
Right.
So they lost purchasing power, but they didn't want anybody to be aware of the change. So number one, it was $1 before 1913 and it was $1 after 1913. Okay? But they allowed two things to remain the same while they got this whole system in place.
Okay.
They allowed the barter ratio to remain the same, so the average income more than tripled.
Okay.
And they allowed the convertibility to remain the same so that nobody realized that you couldn't always just walk into a bank and convert those dollars into gold or silver. It was bimetal, but primarily gold, because gold is the primary currency metal. Okay, so by pumping, and the reason why I'm going into so much detail is because there's so many similarities between the kickoff to this thing and where we are, because that was the beginning, this is the end. Okay. So they typically will allow the public wealth to generate more wealth, so that, hey, if my costs doubled but my income triples, who cares that my costs doubled?
Right.
Right?
Right.
But in the meantime, when a central bank creates money, where does it go? First, it goes into the banks. So the banks make money. The central bank was created to support the banking sector, not the public.
Exactly.
The banks.
Right.
Okay? So it goes into the banks, and then the banks loan it out for stocks, bonds, real estate. Okay, so you might have heard of the Roaring Twenties, and you might have heard that, there was this massive land boom, particularly in places like, Florida. And then, of course, we had the stock market that at that point went to the highest level, was the most expensive ever. And at the same time, in 1928, most of the guys that understood the stock market, because this was the first time the public ever participated, well, they knew that this was just a house of cards and that it was severely overvalued. So they sold out, locking in their profits. And then all the little guys, the John Q. public that was trying to be, emulate these guys because they had so much more money because of all of that inflation.
Right.
They were left holding the bag when credit dried up and the market plunged.
Exactly.
Okay. That sent us into, there were areas that, Federal Reserve insiders will never agree to, but I have all the data and I'm happy to share it. So if anybody wants it, I'll send them the links to it.
Okay.
But the reality is that the Federal Reserve money printing created the catastrophe in 29. And then they used that catastrophe to justify taking the only thing that the public had to hold the government's toes to the fire away from them, which is gold.
Wow.
Because if you did not like what the government was doing, you would simply go into the bank and pull the gold out of the system.
Sure.
That would create restrictions.
Right.
right? So when they
Exactly.
confiscated gold in 33 and they used the crisis to justify
Right.
that, for me, it looks like a setup.
The crisis
Okay. I
they
mean, I've got all
created to
the
take
other
everybody's gold. Yeah.
Exactly. And what did they know when they created it? They knew two things. Well, they knew more than two things, but two key things. Number one, they knew that people marry the legal money of the state. So to keep the name the same, it was $1 before, it's $1 now.
Sure.
Okay, it's still $1.
Right.
So people can't conceive that that would go away. And they also knew that inflation causes what's called nominal confusion.
Okay.
So where if you have, and I think that you have the image of the shopping cart. So if you had $20 in 98 and you've got $20 today, well, nominally, they're just the same. But in 98, $20 could fill up a shopping cart. What does it fill today? Maybe a couple things up where you sit the baby?
Yeah.
Right?
That's absolutely insane. It's this, and that's what it's called. It's called nominal, what was it called?
Confusion.
Nominal confusion. And so it does confuse people. So it's a really perfect word for that, because you get, you literally think, oh, I have this set amount of money. I mean, we experience it all like frogs in boiling water.
Yes.
What we could buy in the 80s and 90s versus what we can buy now.
What you could buy in 2008 when the crisis hit and what you can buy today.
Sure. Absolutely.
Okay?
Absolutely.
So inflation, what people really, I think people critically need to understand the most important function of, well, we'll just talk about dollars, which is inflation that is baked into the system. So back in, 1913, a dollar actually bought a dollar's worth of goods and services.
Right, exactly.
But just recently in the Federal Reserve, FRED, F-R-E-D, if you Google that, that's my favorite website because that's where I pull a lot of charts and graphs.
Okay.
But they have one on purchasing power. And as of April 2018, according to the Federal Reserve, the value of our dollar is less than 4 cents.
Yes. We were just actually talking about that yesterday because you had said it, and it's mind-boggling that it's mind-boggling that you can't even grasp something like that. And so what that does is, if somebody put $5,000 under their mattress in 1930 and they pull it out now, where is it? It's gone. It doesn't even, the purchasing power is completely gone. And I think that one thing we're even taught in school, we're taught everywhere, is that inflation is inevitable.
Right.
It's a part of your life, and you just have to deal with it. But for 200 years of our country, we didn't have the inflation, right? The dollar was a dollar.
When you're on a gold standard, the value of it, based on supply and demand, varies within a thin band.
Yeah.
But when you're on a fiat money system, and fiat, the literal translation is by decree, so a government money system.
Okay.
And the reason is because that inflation is an invisible or almost invisible tax that they do not have to legislate.
Right, exactly. And constantly taxing us.
Right. And for corporations, what that does is the average wage earner their income never keeps pace with inflation by design. But the products do, right? If you pay more for the product. So what that's enabled has been that income inequality where, like in 1971, the average wage was about $9,600.
Wow.
I think today it's about $54,000. Yeah. So nominally, that sounds great. I mean, I'd rather get $54,000 than $9,600.
Yeah, right.
However, a family of 4 could live, and I'm not saying high on the hog, but one wage earner, and they could live comfortably on $9,600.
Yeah.
But today, if you make $54,000, you probably need 2 wage earners.
You do. You absolutely do.
And you're somewhere near $100,000, and you're still paycheck to paycheck.
You are. That's true. To just buy the same amount of goods that you would have before, a house, a car, and things like that.
Right.
So you gave us a really great basis in a history of early America and seeing where it's happening. Now, you lived through obviously a lot of financial turmoil, and you experienced it, and you're seeing one of the things I've heard a lot of financial market analysis say. What we did in 2008 by bailing out the banks was kick the can down the road. And we should have, if we didn't bail out the banks, we would have had the economic catastrophe that everybody seems to at least kind of acknowledge is going to happen at some point. So when you look at, the different stock market crashes that you've experienced and you've been through, where do you see us today? Like, if you don't even need to be a sage or a prophet. You just need to be able to look at the past and say, wow, this is where we're headed.
Well, I think we have begun actually just recently, and I'm going to talk about a little bit later, that we have definitely entered what I would think of as the melt-up phase of this.
Okay.
The problem, it wasn't just that 2008 was a normal market correction.
Okay.
It was, this system is based upon constantly compounding debt.
Okay.
In 71, Nixon removed all gold from backing the currency.
Okay.
And actually, when he did that, where we were disallowed in 33, the public was.
Right.
Well, when Nixon did that, he disallowed governments that didn't like our policies.
Right.
That could convert dollars into gold at $35 an ounce and pull it out of the system.
Right.
So he basically handed over full control of inflation to the banks.
Wow.
Now, what do banks know? They know debt and they know leverage.
Right.
That's how they make their money.
Right.
So part of what we have to understand where we're going is also that piece, because that was a money standard shift that I did live through. As a teenager, I didn't understand exactly what I was living through.
Right.
But when you look at currency shifts from at least a quasi-gold standard at that point to a full debt-based standard,
right,
there are common things that happen all the time. There's always war. There's interestingly enough, now I haven't gone back further than the turn of the century on this, but there always seems to be a women's movement.
Oh.
So in 1914 we had the suffragette movement.
Interesting.
It is interesting. In the early 70s, because I was part of that one, we had the women's lib movement.
Yeah.
And now we have the Me Too movement.
Sure.
Also seems to be things on civil rights during those periods of time. So there's a lot of different uphill or turmoil to distract you.
Do you think it's like a sleight of hand type thing?
Yeah, I do think that is part of it.
Don't look over here while I do this over here.
Exactly. So in 2008, what that really was the death of the credit system. Credit dried up. Debt levels have now blown up to record levels, whether it's government or corporate or individual or municipality or state.
Right.
The debt levels are so huge, and the tool that central banks have to regulate the speed of inflation, which is really the genius in this new system, are interest rates.
Right, right.
And interest rates have been anchored at zero since 2008.
How is that even a possibility? Because interest rates, in the 80s, they were pretty high, weren't they?
Well, they were, and they had to push them high to give them some ramp room. We were going into a new system that was based upon debt. You couldn't start that at a low level.
Okay, gotcha.
And in fact, so they actually pushed them a little bit above 20%.
Yeah, it was crazy.
Yeah.
Yeah, it was. I remember having a 5-year CD at 15% interest. I remember that back then. My babies were little, so I definitely do remember that. But that's what they had to do to gain confidence and make this transition. Again, allowing, that was good for savers.
Right.
It was bad for debtors, but it was good for savers. So, and then you might remember in the 80s, you had Dynasty and Dallas, and greed was good. Gordon Gekko, greed was good. And so the 1980s was this piece's 1920s, roaring 20s.
Okay, that's interesting.
Okay, people don't look at it, but there's so many parallels because all of these things have a similar pattern. You just have to start to recognize the pattern, and then you can see it. Yeah. So where we are right now is that the system basically is it's not that it's not sustainable, which is what they always say. This is not sustainable if we keep doing this.
Right.
The reality is it's not payable.
Okay.
And I did a study about, I think it was 2009, because I said to myself at that point, we were dealing with $1 trillion deficits, but we were servicing about 13 trillion in debt. Now we're over 22 trillion.
Exactly.
And I said to myself, but wait a minute. Most of those deficits happened during the crisis.
Right.
So why in the world would we be servicing that? And I went back through all of the data, which everybody has access to on that Fred website or any of the other government agencies. It's open. And what I discovered at that time was that 77% of the debt that we were servicing was actually compounding interest.
Okay. Right. So it's
just
just
the interest
on the loans.
Exactly.
Okay, wow.
Because if you are running deficits, which of course now I'm talking about this because we're going into massive deficit spending again, okay? But if you're running deficits, what that actually means is that you don't have enough money to pay your basic bills.
Right.
Let alone all of the interest on, so they just pay this little bit of interest, and whatever they don't pay just goes on as principal. Anybody that has a credit card that makes a minimum payment knows how that thing works.
What do you say to the people who really don't care and they look at it and say, well, we're America, we can print all the money we want to print? And you see and you hear politicians saying that. You hear them saying, it's no big deal, we can just print as much as we want, the debt is it's not a big deal. I mean, you have very few, Rand Paul, Thomas Massey, a few people in Congress, Ron Paul, who talk about it, who say this is a really big deal. But what do you say to the people who say, oh, it's no big deal, we can print more?
Well, what I would say to them is good luck, Maluka. But number one, but number two, you know, look, that seems like such a big thing, but take it down to you personally.
Sure.
The more debt that you have to service, if your income does not keep pace with your debt growth, that means that you have less money to now go out and stimulate your economy with, to go out and spend.
Right.
So for governments, that means less money on services that they provide.
Right.
Okay, maybe less money on entitlements because they just started dipping into the trust fund. But honestly, they've run deficits in the Social Security since 2010.
Right.
And Medicare is even in worse shape.
Right.
So we have this massive problem globally of people retiring, the aging baby boomers. I'm part of that, right?
Exactly.
With most of them having less than $10,000 to retire with.
Wow.
And most people can't come up with $500 in an emergency.
Wow, it's true.
So you tell me how that works.
Yeah, I just watched a Prager University video the other day that said that when Social Security was founded, there was 150 to 1, the workers. 100, and now it's like 2 to 1. And that's not sustainable. How can that be sustainable to have two people paying for the retirement of one person? It doesn't make sense.
None of it is, and that's the problem. It doesn't matter where you look. I think that these people that ignore this are absolutely foolish because where do governments generate income? Your taxes.
Right.
That's where they get their income from.
Right.
So what did they just do? They cut the taxes for the corporations from 35% to 21%, allowed them, and they did this in 2000, and I think it was 4 or 5 as well. Bush did it, where he allowed a lot of money held overseas to be pulled back at 15%.
Wow.
Okay, you and I don't get that benefit.
Right.
But the corporations that are having, some of their best years ever as far as profit margins, certainly CEO pays, right? But they get this benefit to really keep these markets flying up because people are not looking at the value of the dollar going down.
Right.
And so the more money that they print, the less value that the dollar has. Hence, officially, we're below 4 cents.
Right. Exactly.
And the silent tax is crippling the average person. It's crippling everyone, but we don't understand it because it is the silent tax. We don't care. I think a lot of people just don't care. But I think that at this point, if it's okay, I would like to kind of segue, I don't know how you want to word the question, into cryptocurrencies, because as a truther channel, which is kind of what we are, and a lot of our viewers come to us, okay, Michelle, okay, Leah, we understand the Federal Reserve is bad, but we also understand that without digital currency, society kind of collapses. You can't have your brand new car. You can't have your home loans. You can't have all of these things if you kind of go back to, and you can, it just would have to be done correctly, but the thinking is, so let's switch to cryptos where we control all of this stuff, and they all think it's the best and the greatest thing since sliced bread. Okay, so those evil people started this really bad thing, but now we're dependent on it, so we should control it, and they think that we're going to make this massive switch, and it's going to be fantastic. But you had mentioned you've been seeing patterns for 5,000 years, and essentially we all learned this from G. Edward Griffin, who kind of started this thing. It can't be. It's not going to be sustained.
Well, you can't create. Well, in my opinion, with the cryptos,
create wealth out of nothing.
You can't create wealth out of nothing. Somebody they say, oh, you're mining things with a little computer thing. That's not real work
unless you have a pitch axe and you're going into a mine. I mean,
it's not real.
So think about it, because you're right. It's a perfect segue. The system that we're in doesn't work. So they need a new system to transition us back into, and one where they can keep control. But their problem and their solution, the problem is that when the collapse happens, confidence has been declining for many years.
Right.
So the confidence, if something has really no value, but you have confidence that it has value, right? That's what they need.
Yes. Right.
So they needed a trustless system. People think that this is something that the public created for the public good.
Right.
I am not one of those people, because I've read the white paper from 1996 NSA, which is a government agency, on how to create a cryptocurrency.
Exactly.
And I think we learned that from you, by the way. Yeah. But tell our viewers in case they don't know.
That's okay, because we all learn from each other. That's the beauty of community, really.
It's very true.
So, and then a year later, there was a peer review, so a legal paper on smart contracts in 97. Okay. So, because they knew that when this thing implodes, all trust will be lost in the way the current system is set up, and certainly the banking sector.
Right.
So, and technology has been really kind of doled out to us really since the 90s to get us used to it. And they now have the first generation born that grew up with this technology. I mean, this morning I was talking to Megan, because she showed me how I could listen to my phone some things on the internet while I was driving, but I couldn't figure out how to get it back onto CNBC, which is what I like to listen to when I'm going back and forth. So, okay, I'm 63. I don't have that comfort level.
Right.
I managed to do it. I'm not really sure how, but Megan has taught me how to do it now.
Well done.
But, so I mean, I get it. We needed a generation that would just easily move into this space.
Right.
But this is a trustless system. That's what we're told.
Right.
Okay. We're told that it goes around the banks, but everything flows through a computer network.
Right.
So I'm not really sure that that's so true.
Right.
And when you look at all of the patents that the banking sector and the central banks and the governments have applied for on this technology.
Yeah.
It's really the blockchain technology, but I am certain that at some point in here, probably during the next crisis, we will be transitioned into a cryptocurrency.
Wow.
Now, if you read any of the IMF's reports, because this is, at least it's in every one that I read. I don't read every single one they issue, but I read a lot of them.
Okay.
What they need to do, just like they took the gold away from us, now cash, it's losing its value, but it protects your principal.
Sure.
Right? And right now in the current system, when the central bank issues a policy, it takes 18 months to go through all of the financial plumbing before they know whether or not they got the results they want.
Okay.
Once everything is in cyberspace, then bam,
It's
that's
instant,
immediate,
right?
especially when they get rid of cash.
Okay.
So
Yeah.
cash is for them performing the same kind of restriction that gold did for us back 33.
And we're seeing a push towards a cashless society. Ron Paul even had an interview saying how bad it was to go to a cashless society. I mean, there are places that you can go right now and they won't take cash.
Exactly.
And so that really limits us as human beings for bartering and trading one-on-one. You have to go through, and it's all traceable. So every purchase, everything's traceable by the government.
Exactly. Now, the other thing is in the 40s, the U.S. took over as the world reserve currency, which means that globally, all assets are valued in terms of dollars.
Right.
So if you're a government or a country or an individual or a corporation or an individual going outside of your borders to buy anything, this isn't so much true anymore, but it was up until about 2006-ish, that you had to use dollars in order to make that transaction.
Right.
Which is a huge benefit to the U.S. because we were the only country that did not have to go out and buy somebody else's currency to make a transaction. Right?
Exactly.
However, the world doesn't trust us anymore.
Right.
And why should they? We've abused them severely.
Right.
And so the International Monetary Fund, and you need to understand that the members of the IMF are every Treasury Secretary and every central bank chief. So unelected officials, but global.
Right.
Okay. They are really the ones, them and the Bank for International Settlements, which is the central banker's central bank. Those are the two most important banks in the world. Okay. And they are the ones that are driving this bus.
Right.
And they have chosen China to spearhead the transition.
Yeah, I'm
now,
seeing that.
The dollar that you're talking about that the countries had to buy, we kind of base that back to the petrodollar. Am I wrong there?
No, you're 100% right. Because once we didn't have any gold backing it, actually, our Treasury Secretary went to the IMF at that point because there was a run on the dollar in the 60s.
Right.
And you could see it where the world understood that we were funding the Vietnam War by inflating away the dollar.
Wow.
And so they were converting, that's why Nixon closed the gold window.
Right.
They were converting dollars into gold and sucking the gold out of the system.
Right.
So much so that by 1971, we had less gold in our coffers than we did after the confiscation in 33.
That's insane.
So, so I mean, there's always, so we went to the IMF and said, here, obviously this is not working anymore, but then Kissinger went to Saudi Arabia, and since oil was such a big key for the globe at that point, you know, he made we made a pretty good deal.
Yeah.
For Saudi Arabia, that influenced what they would accept in exchange for the oil in the Middle East.
Right.
Okay, we said, okay, we will protect the House of Saud. And hey, any of your excess dollars that you get from all this oil, just buy treasuries with them.
Right.
Okay, 'cause I don't think they understood nominal confusion either. However, So that was a great deal. But yes, that's why we ended up retaining our position as the world reserve currency.
Right.
But, you know, historically, nobody retains it forever. You always transfer. And
Right.
it looks like what they want, the International Monetary Fund, well, I'm sorry, in 2009, China said, how about the SDR? Now,
Right.
the SDR might be new to a lot of your viewers.
It is.
It's simply a name, and it stands for special drawing rights.
Right.
But unlike the dollar, which is based upon debt, and so therefore, at least in theory, it is a claim against something.
Mm-hmm.
Okay. The SDR is, go on their website, they'll say it all over the place. It is not a claim against anything.
Mm-hmm.
So it is essentially air. But the goal was, China brought it up in 2009. How about the SDR? Well, I'd been paying attention to the SDR forever, but it would just sort of languished, you know, when they didn't need to pull it out. They didn't dismantle the mechanisms.
Okay.
They just let them rest.
Okay.
In 2009, after China said that, damned if they didn't test the system by injecting massive amounts of SDRs throughout the globe, dusting off what they call the substitution fund, which I'm definitely going to explain because especially here in America, we need to be well aware of this. And the plan was to transition the title of the world reserve currency to the SDR and the IMF in control.
Wow.
Okay.
And to explain that a little bit further, I was listening to, I don't even know, maybe Tucker Carlson. China has been trying to devalue our dollar, right? Is that correct? They've been working hard to do something, to change things.
Well, they've been working hard to do something, but understand that it was, I'm pretty sure, I'd have to look at my data, but I'm pretty sure that it was in the 90s, mid-90s, where China wanted to become the manufacturer of the world, and they actually pegged their yuan directly to our dollar. And that gave manufacturers, you know, this really helped spur things, because if the yuan floated free and they were manufacturing there, they did not know how much they were going to make. They didn't know how much they'd earn because of that currency fluctuation.
Right.
But when it was pegged to it, they absolutely knew that, you know, if the dollar went up, so did the yuan. If the dollar went down, so did the yuan.
Okay.
So what has actually happened, this actually started in 2007, 6-ish, 7-ish. They partially depegged. Okay. That was actually an indication to me back then that something nasty this way comes, because the dollar fell to the lowest level historically against other currencies.
Wow. Okay.
Okay. And I said, this is not a good thing. I was pretty much freaked out by it. It took about a year. That was July of 2007. And even though things were happening before that and after that, I don't think the world really understood what was going on until September of 2008, when the market started to, I don't know, implode.
Implode, yeah.
But there are all of these markers that have happened all along the way. And I'm seeing a lot of them again now. I started seeing them big time last October. So almost a year, I'm seeing a lot of shifts. But the IMF has chosen China because that is a technocratic government. I mean, it is a communist government, and the banks and everything will do whatever the government says.
Exactly.
That they will do. Nothing happens. I mean, they have agents in every single corporation. Whether you're an American corporation or a Chinese corporation does not matter, or any other from any other country. They have communist cells in every single corporation in that country.
Right.
Okay, so nothing happens without the government's permission.
Right.
And so that's who the IMF has slated to create this transition. Now, I want you guys to understand, we had to agree to it.
Wow.
Because we had the most voting rights at the IMF, and they modified the SDR is a basket of currencies.
Okay.
They modified their rules to include the yuan in that basket.
Wow.
And they also allowed them to issue the first SDR denominated debt.
Okay.
Wow.
Okay.
Wow.
So, but and honestly, now this is my opinion. I can't prove this piece, but I do believe that that's the blueprint that they really, we're moving more and more toward a one world government, and that's the kind of government that they want, where you have technocrats, and a technocrat is like a scientist, it's somebody that puts formulas and processes at the top of the line ahead of the people.
Devaluing humans, devaluing the individual.
Just assigning a number.
Exactly.
Which is what we're kind of seeing in Japan. They're literally putting...
That was in China.
Or that was in China?
In China, they're devaluing people.
They're giving them like a social number.
Social number.
You can't get flights if your social number isn't high enough. So they are definitely
that should really
doing
worry
that.
people.
It should.
So how do you see all this?
How
do you see all this affecting us and the future? Where do you see it happening? Don't put a number on the day. Don't be some end times. Jesus.
Because I don't control that.
Obviously, but as you seeing it happen. Like, your gut has to be telling you something.
Oh, yeah, without a doubt. We have already begun the transition to a completely new monetary and financial system. We're in the fourth revolution is what this is being called.
Okay.
And it's huge. And what the goal is for us to lose more and more of our freedoms and our privacies and all those things, and for the unelected officials to have a lot more of that power.
Exactly.
So part of the cryptocurrency piece, it's really the blockchain technology that the governments and the banks are primarily interested in. But part of what they want to do is globalize and mobilize all of the assets.
Yeah.
So they are talking about digitizing all tangibles. Including the shirt on my back and your backs and this mug and your real estate and all of this.
So they're
I can't pause
Yep, and they're doing it through a Chinese company, AC Chain.
Yes.
And even though the IMF has not formally said, well, oh, yes, we're working with them, because they would not say that. But I guarantee you, their coin, AC Coin, when you buy it with Bitcoin or Ethereum, it magically becomes an SDR.
Wow.
And much as everybody would like to say that I don't know what I'm talking about with cryptocurrencies, and I'm not an engineer. They're absolutely right. I do not know how to write code. Though I have spoken to those that do know how to write it. I have never had anybody come back to me and say, see, what you're thinking is ridiculous, because here's another coin that turns into an SDR and another coin that there is no other coin that turns into an SDR that I know of. If anybody out there knows of one, please let me know about that. But they do have ties